Well, interest rate predictions are now officially all over the place like a dog's breakfast. ANZ's economics team came out today and said the Reserve Bank will hike rates next week. Westpac is sticking with its prediction of a cut. Most economists are saying rates will go up in November. Some say they'll stay where they are. And futures markets, as shown by this chart, are still predicting a rate cut. Not much of one, and less than they were predicting just a week ago. The currency stayed above $1.10 US today, although a bit lower against the US dollar than yesterday's 110.5, but this was due to a small rally by the US dollar, which is shown by the fact that our currency went up against all the other currencies. There are now three factors at work on the Aussie dollar: US dollar weakness, interest rate expectations, and the terms of trade. Now, this long-term chart from AMP suggests that just looking at the last of those, which is the ratio of export prices to import prices, the dollar has further to rise. But if the US dollar continues to fall and interest rates do go up, then it's a perfect storm. The local share market had a 1.6% fall today and has now dropped nearly 3% this week because of the debt ceiling fiasco. The banks have been especially hard hit because the selling pressure, after all, is all about concerns for the global financial system. Macquarie Bank fell 4.5% after forecasting a lower profit. Myer and BlueScope also fell more than 4%. BHP and Wesfarmers lost 2% each. Wall Street fell 2% last night. European shares fell 1%, but there was a pretty big sell-off in Italy. And the Japanese market is down 1.5% today, although other Asian markets were more like 0.5% lower. And that's finance.